Okay, welcome. My name is Kyle, and this is going to be an e-tutorial on how to solve problem E17-22 from the Pearson workbook. So what we have here, we have the income statement and additional data for on photography. So we have a whole income statement here, and then we have a bunch of additional data. And what we need to do with this problem is prepare a cash flow statement using the direct method. So you know what? I'm not even going to read this additional data right now. I will need to read it, of course, in order to solve this problem. However, I prefer to just always get myself set up with a template, go through what I know, just line by line. It just is easier, much easier for me to structure my thoughts that way. So what I'm going to do is create myself a cash flow statement template. Of course, we know all financial statements start with 3 title lines, so I'm going to put company name first, so on photography. The statement name, so statement of cash flows, and for the year ended December 31st, 2020. Okay, so we know the cash flow statement is segmented into 3 major sections, so I'm going to put subheadings for those. That's cash flow from operations, flow from operating activities, and we have investing activities and financing activities. Okay, and then we know the cash flow using the direct method. The operating activity section, I like to just structure into 2 subheadings because we know we're going to be putting what are our cash receipts and what are our cash payments. So I like to always just put receipts, payments. Oops. And then I know that every single line item included within the information that we're given is going to be categorized either here, 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 or here. Okay, and then I can just go through this line by line basically and categorize it to where it needs to go. So we're doing the direct method. If I was doing the indirect method, I would start with net income. Remember that's step 1. But here I'm not doing the direct indirect method. I'm doing the direct. So I'm starting with what are my cash collections? What are my cash receipts? So I'm looking for keywords, collection, receipt. And if I go to the additional data, it tells me collections from customers. Okay, so that's a keyword we need to be aware of. From clients are 3,500 more than revenues. Okay, so I'm going to put cash collections from customers. And I'm looking up at my window. It's right above me and it's snowing right now. That's pretty crazy. It's been wild weather this past couple of days. Cash collections from customers, and it was 3,500 more than revenues. Okay, so we go to revenues. It was $137,000. Our cash collections were more than that. So I'm going to put 137,000 plus 3,500. So how could it be more than revenue? How could we collect from customers more than revenue? Well, remember we would have had accounts receivable set up from last year. So we're collecting on last year's accounts receivable balance in addition to whatever accounts receivable balance this organization would have set up this year. So that's how it could be more. So that's the first one done. Increase in cash balance of $5,000. So what are we going to do with that? What we're going to do with that is, well, this gives us a hint to what our net cash flow needs to match to. We don't need to do anything with it right now, but you know what? I'm going to just put this down at the bottom somewhere, right here, because once we're all said and done, that's going to be the net change in cash. That's going to tell us if we did this properly. So I'm not going to cross that off. I'm going to keep B. We're going to need that later. Payments to employees are $2,000 less than salary expense. So payments to employees, it was what? $2,000 less than the salaries expense. So remember, payments to employees are cash outflows. So this is going to be a negative amount. Our salaries expense was $74,000, but we paid $2,000 less than that. So I'm going to subtract $2,000 off of that, and it should be, sorry, 72,000. So how could it be less than the expense? Well, again, remember, the income statement is based on the accrual basis of accounting. We recognize expenses as soon as it's incurred, not necessarily when the cash is paid. So this organization, if we had their balance sheet, it would show salaries payable for it, right? And that would be paid likely early in the new year, likely early January, if this is a December 31st year end. So we've done with part C. Interest and income tax expense equal their expense amount, equal their cash amounts. Okay, so payments for income tax, so this is going to be easy for us. It's going to exactly equal the payment on the income statement, or the expense, sorry, on the income statement. And for, what was it, insurance? Interest. And interest was 1,000, okay, and I didn't structure my template to give me enough space, so I'm going to shift that down. So that's part D. Acquisition of property, plant, and equipment is 58,000. Of this, 50,500 is paid in cash. 7,500 is paid, is by signing a long-term note payable. Okay, so we know anything that's really going to impact net income is going to be included or categorized as an operating activity. However, the acquisition and sale of long-term assets is a investing related activity. So that's going to be the next section here for us. Acquisition of property, plant, and equipment. And I'll put acquisition of PPE, property, plant, and equipment, well, the full amount is 58,000. That would be the asset amount on the balance sheet. But this organization only paid 50,500 in cash. So that's going to be a cash outflow of 50,500. Now, what do we do with the $7,500? Of course, they would have a liability for it. It's a long-term note payable, so they would recognize that as a liability on the balance sheet. But we actually here don't fully reflect it as a cash outflow for investing. Instead, what we would do is disclose that in the notes to the financial statements that they purchased $7,500 of a long-term asset with a note payable. So it would be disclosed in the notes. We're done with E. Cash received from the sale of land is $5,000. So that's going to be a cash inflow, sale of land. I'm just going to format these cells a little bit better and shift this up. Sorry about that. Just going to unmerge some of my cells. Okay, it's a little bit better. Okay, part G is next. Cash received from the issuance of common shares. So issuing common shares is a financing related activity. Issuing shares, and that's going to be a cash inflow, right? You issue shares to raise money, and it was 21,000. Payment of long-term note payable, right? When you take out debt, it's a financing activity. When you pay it back, it's also considered a financing activity. So since you're paying down debt, it's a cash outflow. So payment of note payable, and it was $10,000. And payment of dividends, $7,500. That's again a financing activity. Now, dividends are kind of a tricky one for many students because dividends received are categorized under the operating activity section. Why? Well, dividends received is really another form of revenue, so it would be included in net income. Anything that's included in net income is already going to be reflected in the operating activity section. So we categorize dividends received as an operating activity. However, dividends are paid out of after-tax income. Remember, it comes out of retained earnings. So since it's paid out of after-tax net income, it's not reflected in net income, and therefore it's included in a financing activity section. So payment of dividends is going to be a cash outflow of $7,500. So we did H and we did I. Payment of rent and insurance are equal to the expense. Okay. So we go back up to the operating activity section. Why? Well, because rent and insurance are operating activities, right? They're included in the net income. So payment for rent, and it was equal to their expense amount. So rent, 6,000, and for insurance, I believe it was, equal to $1,000. Payment of office supplies is 3,000 more than the expense. Okay, so we're almost done. Got more operating activities. I'm going to shift this up. Space for office supplies. And it was 3,000 more than the expense. So it was 1,500, and I'm going to add 3,000 on top of that for 4,500. Okay, and let's see what else we have here, and that's it. So I'm going to do a total now. I'm going to do a subtotal for every section. So net cash divided by operating activities. I'm going to sum this up. And net cash provided by investing activities. Sum this up. And net cash provided by financing activities. Sum this up. And then I'm going to do an overall increase or decrease. Remember, decreases or negative amounts are represented in parentheses on a financial statement. So increase or decrease, if this number is negative, it'll be represented in parentheses here in cash. I'm just going to add up the three subtotals here and we'll see what happens. 25,000. Okay, so I made a mistake somewhere. This is not great, but let's see. Collections from cash, 3,500 more, yes. Payments to employees are $2,000 less than salaries expense, yes. And I know that this is wrong because it told me there was an increase in cash balance of $5,000. So let's see. Hopefully it won't take me too long to try and troubleshoot this. Interest and income tax are equal to their cash amounts. Income tax, yes. Interest, yes. $50,500, yes. Cash received from sale of land, okay. Cash received from issuing shares, 21,000. Okay. Payment of long-term note payable. Oh, here we go. All right. Payment of long-term note payable. Where are we? Right here. H. I'm paying down that debt. I'm not taking out more debt. So it should be a cash outflow. So I should have had that as a negative amount. There we go. Now my increase and decrease in cash is 5,000. So sorry about that. Should have been a little bit more on top of this as I was going through this problem. But now we have a cash flow statement that we know is correct because our increase in cash matches what the problem told us it would. Okay, but we're not quite done. We're basically done. I'm just going to do cash beginning of year, and it told us somewhere the opening cash balance was $8,000. So I'm going to put $8,000 here, and cash balance end of year is those two, of course, added together. I'm going to double underline to indicate that there's no further calculation. And we're done with our cash flow statement using the direct method. Now, this cash balance end of year, it's going to reconcile with the cash balance on the balance sheet. It should match 100% correctly. Okay, so this is the cash flow statement using the direct method from E17-22. Totally embarrassed that I made the mistake, but hopefully you learned a little bit something through my mistakes. I know I always do, so maybe there's use in that. My name is Kyle. I hope you found this tutorial useful. Have a great day.